Hi there, Andrew Bell with you. And today I want to give you a snapshot as momentum continues to build right across the Australian property markets. As the largest real estate company in Australasia, dominating in listings and selling right throughout the country, Ray White as a group is a great barometer of activity. With $6.1 billion in sales in February, this was a $2 billion or 49% increase in February over February of last year. It was the best February results ever recorded. Now, whilst there are many contributing factors to the strength of the market, we hear lots of people reporting that the sharp price increases are because of the lack of stock available for sale. However, this is not actually the case. It's true that the total number of listings on the market across Australia and New Zealand indeed is down 13% on last year, down 32% on 2 years ago. But the total listings are not relevant as they include all kinds of old stock. A more relevant question is, how many properties came to the market in the past month? In Australia, in February, Ray White listed 5,977 properties, which was nearly 10% more than was listed in February 20 and 15% more than 2019. We sold 4,819 properties in the month, and so we are listing more properties than we have for the past 2 years, and listing more than we are selling. There are some early signs in March that listing numbers are continuing to rise. Is this an early sign that the market is starting to self-correct? There's some clear signs that financial regulators are closely monitoring the recent jump in house prices, and they're ready to clamp down on property lending if banks take on too much risk. These concerns are off the fact that residential property values rose at the fastest rate in almost 17 years in February. For the month of February alone, there was a 2.1% increase in property values nationwide. Whilst the demand is certainly from home buyers, there was a 9.4% increase in loans to investors in January, the biggest gain in more than 4 years. If the financial regulators get concerned, they will actively target credit growth as a way to put the brakes on real estate prices. Remember back in 2014, the regulators tightened home lending rules for about 3 years when they were last concerned about the rising real estate prices. Auctions are, of course, providing the preferred method of sale at the market at the moment, and they're a great barometer of the true expression of people's desire for property. Fabulous results have been achieved in this space. I also thought it was time to do a quick snapshot that I regularly do about the five fundamentals that drive real estate. Let's have a quick look. The first fundamental is the economy, gross domestic product. Much was reported last week about the V-shaped recovery. There is a picture of that on screen right now, which shows how quarterly growth did decline as a result of COVID and went to a negative 6%. And then, of course, we now see the substantial bounce back that's been occurring. Most people have been caught by surprise with just how the economy has responded as restrictions are lifted. Forcing people to stay within Australia has been one of the great benefits to our economy, as well as people's reaction to spend rather than save. Now, the second fundamental is interest rates, which have remained at record low. It has made borrowing money for cars, boats, caravans and real estate so appealing. The big question is, will they stay low, and what happens to borrowers when rates start to increase? Whilst the Reserve Bank stated it was their intention to keep rates low for at least 3 years, the actual money markets are forecasting interest rates to rise by the middle of next year. Now, the money markets are usually right, but time will tell. Third fundamental is population growth, which continues to be low. Not only is the natural growth through birth down significantly, but immigration, of course, is non-existent. And it's likely that we'll not see that immigration pick up until 2022 at the earliest. It means that the normal annual increase in population that increases demand for all types of products, including real estate, is simply not there at present. 1 year with no population growth might be able to be absorbed easily, but when it starts to run into year 2 or 3, it will have an impact on demand for real estate. Unemployment is always a big factor, and whilst unemployment was forecast this time last year to rise to over 12%, no one ever thought of something such as JobKeeper. No question, it was a lifesaver of the economy. Remembering unemployment was hovering around 6% prior to COVID, it's pretty amazing to see unemployment reported at 6.4% in January and falling. In fact, national employment was only 59,000 people lower than March of 2020. A remarkable performance, and one that remains positive for the real estate market. The last key fundamental for the real estate market is affordability, and this is definitely starting to have significant shifts. Whilst lower interest rates helps housing affordability, higher prices do not, and so as prices continue to rise, affordability will decline. That will start having a braking effect on borrowing. It also is interesting to note that Queenslanders' personal debt skyrocketed towards $3 billion over the past year as people turn towards payday loans, buy now, pay later services such as Afterpay, and short-term loans to get through the worst recession since the Great Depression. These sobering figures show that Queenslanders had an average of $4,038 unpaid on their credit cards at the end of the month of December 2020, had unsecured loans of $8,271, plus an average $2,754 on the buy now, pay later programs. This will start to eat into the ability to continue to borrow and buy. The other factor that I like to keep an eye on is supply and demand, but I'm going to touch on that in more detail in my next report in a fortnight's time. As I mentioned, this is just a quick snapshot that tells us the markets are continually moving. What we know is nothing continues exactly the same for all time. And as we pass the anniversary of the start of COVID year, it will be interesting to see where we are 12 months from now. Now, we're very proud tomorrow to be hosting our big Business Meets Sports luncheon to raise money for the Surfers Paradise Surf Club. It's wonderful to be able to bring our community together for the first big fundraiser of the year. We absolutely love the Gold Coast and are so proud to play our part in making this a better city to live in for all and safe on the beaches. I look forward to being with you in a fortnight's time, feeling very blessed to be an Australian and particularly to be a Gold Coaster. See you in a fortnight's time.